Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Hope everybody's having a fantastic evening so far. Hopefully your trading's been going well. We had an awesome bankers close trade or class this morning. A lot of good trades there taken. Um, awesome profitable week to start 2023, to be honest. So wouldn't have it any other way. Just so excited. Anyway, guys, let's jump into this. I need to share the disclaimer with you guys. Let's do that first. As always, I need to remind you guys about the risks involved in the market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. Okay, awesome, guys. So let's do this. So tonight's COT report night, a little different from our bankers close trade. So what we'll be doing is we'll go over the COT report journal that I have. I'll make sure everybody has access to it in the chat box. And then let's see, the other thing I wanted to do is just kind of explain how we can use the COT report to take more informed trades and trades that are more aligned with more swing trade opportunities to long-term opportunities even. It can be a very useful tool in terms of picking a direction for the week or having a general bias. Let's actually talk about just for a moment, like what the COT report is and how it could benefit you and your trading. So the COT report stands for Commitment of Traders. It's released by the CFTC.gov website. So CFTC.gov is where you can find it. This is their homepage right here. And basically what it does is it shows you but how many positions long and short are held by the banks and institutions, firms that are on the Chicago Mercantile Exchange and other exchanges, right? There's a lot of different exchanges, but the one we generally go off of is the Chicago Mercantile Exchange. And we monitor to see who's buying there, not necessarily who's buying there, and that doesn't matter as much the who, but just the quantities of what's being bought. And we want to follow certain groups. We want to follow the groups that are most aligned with the type of trading that we're taking. Let me show you what a COT report looks like. So if you go over here, click on market data and economic analysis, you'll see where it says commitment of traders. That's COT, right? You click on that and there's a bunch of information that you can read. And there's also a lot of different types of COT reports. So there's not just one. However, there is one that we generally like to use, but there's a ton here that you can look at. Okay. The one that you and I use the most is going to be this long format of the financial or trader in financial futures market. So we'll click on that and it's going to bring up this big old boring report and it's going to give you the most recent report. So the most recent report we have is Tuesday, December 27th. Okay, and you'll see that dated up there at the top. It'll be dated above every instrument that you're looking at. So what the schedule is like this. So on Tuesday, all of these entities have to report to the government, the CFTC, and say, these are the positions that we as an institution hold, and we're doing our filing. We're letting you know this is what we have. Okay, all these firms that are registered on the Mercantile Exchange have to report this every Tuesday. So they gather this information and then it's compiled, and on Friday it's released to the public. So even though this is like a week old, the 27th, there's a new one in transit. So as of yesterday, the banks have already reported to the government what positions they have. And then on Friday this week, so in 2 days at 3 p.m. Eastern, you can hop onto this website and get the most fresh information. Okay. It might be 4 p.m. Eastern. It's either 3 p.m. or 4 p.m. Eastern. I can't remember, but it's in the afternoon, mid-afternoon on Friday. That's when the newest report comes out. So this is the newest report I have, and it's updated weekly. Every Friday you can get a new one. And then what happens is I recommend that on Friday, if you're going to use the COT report for finding a trading direction and what you're going to be doing with it, print it out on Friday, put it into your own journal, analyze it, and then that will give you kind of a general thing to look for going into the week. I don't think any trader should, in my opinion, every trader, professional trader, should be looking at the COT report, just a glance at it, at least at the beginning of the week. I am pretty passionate about it. I've been using the COT report for years now, many years. Is it a holy grail? No, but can it and will it tell you the general direction of where the banks want to send the market? Yes. And is that valuable? Yes. That answer is also yes. So can be very useful. I'll be honest though, I wasn't very good at using it in December. Plus in December, I wasn't taking a lot of swing trades. As you guys know, it was mostly based on, I was just doing the banker's close. And when I'm trading the banker's close, I don't care as much about the direction. All I care about is finding short-term supply and demand, looking for a close type of setup. It's just a quick little scalp trade. But as we get into the new year and we're going into January, February, and getting into some good trading months, I do want to incorporate the COT report and in terms of our overnight trades, and utilizing the COT report as another tool to determine whether or not we should take a trade or not. Okay. Does this position that we're thinking about taking, does that agree with the COT report? Right. I've also had people get funded. I literally have some clients who have used the COT report to get funded with different prop firms with only the COT report. So yes, I know it can work if that's something you're looking for, something a little more passive that you can do. Especially, I've had a lot of people sign up recently who have told me like, hey, I can't come to the banker's close, which I'm kind of mad that they're not here right now, because it's like, hey guys, this is the class you need to be to if you can't come to the banker's close, right? You got to come to this class. Because I'm going to teach you here how to take trades and create an income so that you can still pay your bills and go to the job that you have, pay your bills that way. But in the meantime, creating another income through trading overnight, through swing trading. That's what this is all about right now. Okay, so anyway, you're coming here to get this data. It's pretty boring, but I want to break it down generally speaking. Now, when I navigate this report, I like to zoom in and zoom out. Like I just do a control minus, control plus, and it helps me kind of move around. The other thing that's going to be your best friend with this report is if you do a control F and search the currency that you want to trade. So if I want to trade the Aussie, I just put an AUD and it's going to take me straight to the AUD. And then I can zoom in from there and look at the data that I need to look at, because it is a big report and it will get confusing unless you know how to navigate it. So control minus, control plus, and control F are going to be your biggest friends with this report. Okay. Now, when you're in here, you're going to notice it's categorized, right? You have the dealer side, asset manager, leveraged funds, and other. Okay. So these are all different types of institutions that have different purposes and they have different reasons for trading. Okay. And different purposes behind the positions that they have. Some places trade Forex, but not with the purpose that you and I have. You and I, what's our purpose? We are taking what's called, and it's an actual term, outright positions. Okay. We are taking outright positions in order to speculate the market and make a profit. We are taking positions and forfeiting other positions in the name of profits. That's the name of the game for you and me. Other places, multinational corporations, I'll even just name a few, like Walmart, Costco, Target. These places have stores and sell merchandise in many different countries, and they work in many different currencies. So they often buy and sell currencies to offset merchandise that they own in other countries, depending on what they determine to do, depending on inflation and GDP and a number of factors, right? So they don't do it necessarily to speculate in terms of taking an outright position, but they take positions in the name of hedging, in the name of protecting merchandise that they own and things like that. Having the ability to transact in other currencies as well is another reason why they buy and sell currencies. So those those are in here too. I'm not sure what category they would go under, maybe asset manager or other reportables, because the dealer side, I know what the dealer is. Dealer is basically the market maker who creates and sells in trading instruments. So these could be literally people who create currencies, like it, as simple as that, and sell it to the secondary market. Then you have asset manager, which I talked about a little bit. These are often people who are hedging, companies that are hedging the market. Leveraged funds, though, if you look at the data, you can go back on the other page, the homepage of the COT report. You can read up on these different groups. Okay, so we don't need to go through it all today, but all you need to know right now is, and I've flip-flopped from different places, but if you study leveraged funds, this is the group that are speculators. They are taking outright positions. They are big banks with trading rooms with the purpose of making a profit by buying and selling currencies. So these are the guys who align mostly with the type of trading that you and I do. So we want to know what these guys are up to, because whatever they're doing, good chance it's going to lead to a successful trade for us. Okay. So we do want to be aware of their movements. Okay. So what I do is every week I come in here and I come and grab this information. So I can see that there's 18,771 long contracts on the Aussie, and there's 28,834 contracts short on the Aussie. Okay. So what I do is I grab that info. So I can say 18,771. I come over here and I put 18,771 and I just plug it in. And then I have a bunch of data sets here that are derivatives of whatever I input that give me information. So right now, 100% of all the positions on the Aussie are long. It's because I've only entered long. But after I put in this number, the 28,834, all of a sudden you get a more accurate depiction of how the Aussie's doing. So of these speculators, these professional speculators, 39% of the positions they own are long, and 60%, almost a little over 60%, are short positions. So right off the bat, if you're looking at this, which direction would you want to align yourself? Probably with the short side, right? Generally speaking. Now, are we going to go ahead and just take a position just because? No, we want to get a better picture, and we really do want to try to take the best trade possible. And I'm going to show you how to do that in just a moment. But you have to finish filling it out. So this is kind of the boring part, but you do need to finish filling this out. So you go to Euro next. And by the way, you can all have a copy of this. Here it is. I'm going to put this in the chat box for anybody live or in the recording. Here is the COT report journal. So I have a lot of tabs in here where I've done other studies in the past. The study and the one that really matters is just the dealer one. Okay, there's also dealer backup. Don't worry about dealer backup. Just worry about dealer. And I really need to change that name to leveraged funds, because I used to work on the dealer side more. Now I just focus on the leveraged fund side of things. Okay. So now we want to pull up the euro. We want to find out where the euro's at. Again, with leveraged funds, ignore this, ignore this. You just want to find out how these two numbers are. Okay. So I've got 81,740 contracts long. 140, and I'm going to move this over to my other screen so that I can do this a little bit faster and not switch screens so much. Okay, so I've got 92,874 short on the euro, and then I just do a Control F and search for the pound. Next, here it is. And I've got 57,734 and 50,503. Okay. And then next one up is the Kiwi and ZD. And over here, I'm going to do 9,013 long positions and 778. Okay. And then I got the CAD next, and that's 16,329 and 35,658. So this can go pretty quick. You know, if you know how to find this information, you can go pretty quick through here. Okay, and then on the franc, I've got 3,939, and then I've got 6,519. And then on the yen, I have 28,810, and then 49,437. And then I just got to put in the dollar, and then I can do my analysis, which is really fun. And again, like I said, I wasn't very good at doing this during December or the last couple of weeks in December. You can see I didn't fill out for Tuesday, December 20th. Just because I didn't trade the COT report very much during December, or at least the last part of December. Okay, so I got 11,829, and then I've got 22,095. Okay, now I'm ready to go. So here's what's fun now. Now that I've got this information in here, we can kind of use this information and paint a picture and give us a general analysis as to what we should be looking for. And this is all up-to-date information that we can use for the rest of the week. We could have used it at the beginning of the week when we started to trade. And I guess I technically didn't start trading this week until yesterday because of the new year, which, by the way, I just got to say, I am so excited. I love the holidays, but I think they're so long. I think they're a little too long. And I'm just so excited to, you know, hit the ground running with this. And we've already had such a great start to the year. You know, yesterday, I think I showed you guys, I made over $5,000 from the banker's close just yesterday. You know, there's a lot of people I know that won't even make $5,000 this month. And we just did that yesterday. Then today made 2 or 3 grand on it. It's just amazing. It's just amazing. And I'm excited because I started another prop firm trading challenge. So I'm looking to get even more funding to just accelerate this. It's really just really amazing what can happen. Okay, so let's do this analysis here. This is really one of my favorite parts of the COT report because it's the decision-making time, right? And that's what we love to do, is make the decisions, run analysis. Because if you're right, it's like, hey, I made that decision. You know, you get that satisfaction of knowing I did that, which is really cool. So when I come in here, once I have the information in, I really just pay attention to these two columns right here. So E and F. The reason why these two, in my opinion, are the most important is because it shows you the percent long, and it's a proportional amount, because not every currency is traded equally. You'll note here, for example, look at the euro. Look how many contracts are involved with the euro. In fact, I have the sum of them right here. There's 174,000 contracts outstanding with the euro versus, say, the franc, just over 10,000. So we know that they're not all traded equally. And so we need to proportionally know what the percentage is, long and short, if that makes sense. And that's what this is for, because otherwise, anyway, I've run this analysis a lot of different ways. It's important to know what the percent long or short is, and that's what really matters at the end of the day. Because even though the franc isn't traded as much, if it has a strong bias, that's actually what really matters. Not how much it's traded, but rather the bias that's been created. Okay, and you'll understand that, and that'll make more sense as we go. Okay, so let's look at the top percentages. I like to pick maybe the top 2, maybe 3 on each side. Okay, so right now, nothing's really bullish right now. there's not as many we don't have as many buys out there as we used to. Okay. And I think some of this could be just due to the fact that there's been a lot of inflation just globally. I think that could be one of the factors. There hasn't really been a, a, a strong safe haven currency pair week over week. There's been definitely others. Like right now, this pound has actually been the strongest, one of the strongest options for several weeks, but it's still just 53% long. It's nothing huge, right? The dollar was actually pretty strong for a little bit. That's since receded as well. But for a while, that dollar was actually a pretty good place to put your dollars. Your money was in the dollar. But yeah, everything else seems to have weakened out. So pretty much the top two really are just like the pound and the euro. And even then, the euro's still a little more short than it is long, but it's closer to 50 than anything else is. Everything else is in the low 40s, low 30s, mid 30s, not good. So what's the most short? Because now we have lots more options this way. We have stuff that is really, really short right now. Like you have the CAD extremely shorted, right? So we can definitely mark that in red. What's the next most shorted thing? Probably the dollar, right? Yeah, we'll say the dollar. And I highlight that in red, and then maybe the yen as well. Maybe get a third one. Sure, I'd say so. Yen is pretty short. Okay. So this is it. So you've got your top 3 weak and your top 2 longs, and really just one currency that's pretty long in comparison to everything else. So what would be the best trade to take? Now let's talk about this for just a second for those of you that are new to this and those in the recording. One of our objectives with this is to pick the very best currency and pin it against the weakest currency. Why is that important? So the reason why we want such a disparity and we want to create that disparity is because when you have one that's really strong and another one that's really weak and you pin them together, you fuse it together into a currency pair, that's going to be the highest flying or lowest flying currency pair in theory. It's not every week it works that way, but in theory, that would be the most imbalanced matchup is between those two, the strongest and the weakest. Okay, that is the concept in a nutshell. Okay. Yeah, and overall, I've noticed it doesn't work every single week perfectly, but I've seen plenty of weeks where if you pin this right, pick the pound and pick the dollar, or pick the pound and maybe go with the yen or the CAD or something like that, you can get some really insane moves, which are pretty awesome. So like, I'll click here. Let's go. So I'm going to make the number one currency this week. We'll say, it's not the dollar. It's actually the pound CAD. Yeah, I missed that because it's 68%. I'm looking at that 68% on the CAD short and then 53% on the pound. So technically the pound CAD would be the number one currency pair to buy. And why would it be a buy? It's because, one second, I'm trying to, okay, that is being weird. There shouldn't be, maybe it's too big. Yeah, that's fine. Oh. This messed up. That's fine. Maybe I can delete this, this whatever I'm doing here. Merge cells. There we go. Okay. Let me grab this. Set this up here. There we go. So the best trade this week would be pound CAD long. There we go. Okay. And then the top currencies this week would be, let's go ahead and copy this. And I like to get my top 6 currency pairs. Okay. And I'll show you a strategy that I've been using and other people use. I literally had a guy get funded with a prop trading firm just doing this. I'll show you how this works in just a second. It's one of the most, if not the most passive trading strategy ever. Like, this is for the person who works a job, who can't touch the computer. For like, you can literally, like, this is for the person who can only afford maybe taking a trade on Sunday night, Monday morning, and not looking at that trade until Friday because they're that busy during the week, which is a lot of people. It's very hands off. So basically, if you're going to trade this way, you have to put in your stop losses in, you have to put in your targets in, and just have it all ready to go Sunday night or Monday morning, and then just forget about it. And then come back Friday, maybe even Sunday the next week, see how you did, right? You can definitely do that. You can definitely do that. For me, you guys know me, this is what I do. I don't have another job. I trade and I coach. That's all I do. And so, I definitely take the time to do the banker's close because I have that ability, and it's my signature trade. Anyway, so, but if you don't have that ability to trade the banker's close, then fine, that's great. Trade some of this other stuff. Anyway, let me show you how to do this. So I like to take my top 6 currency pairs because it's not like every single time you're gonna, in fact, sometimes I've noticed like the number 6 currency pair or number 5 tends to work out better than number 1. I don't know why, it just happens sometimes. But anyway, okay, so let's do this. Let's go through this analysis. So we know the pound CAD is the number 1, so I'm going to put that in here. So what's number 2? So I still take the number 1 long side, and I pin that against the next guy up, which would probably be the dollar. So I'm going to be pound dollar long, right? And then what's next after that? Probably pound against the franc, or no, pound against the yen. Yeah, pound yen long. Okay, and then we've got all the pounds taken care of. So the next job is to go with the next most long, which there isn't much that's long right now. So really, it's just the euro against these other ones. I know the euro is shorted generally, but it is the most neutral and it leans longer than anything else besides the pound. So that's why we're going with the euro. So now I take the euro and pin this against the CAD. So euro CAD, and this would also be long, okay? Because it's the base currency. The euro is the base currency, so we're going to go with that. Then it'd be the euro against the dollar, probably euro dollar, euro dollar, also long. And then the last currency would be the euro yen, and this is also, so everything would be a long. Euro yen long would be the top. Those would be the top 6 trades to take this week, okay? Based off of the COT report that was released on Friday. Okay. Now some weeks it doesn't work out. Like, in fact, I've back tested. You can see my back test on here, which is kind of fun to see. I didn't do the last couple of weeks. I'll go ahead and do those later, probably not today, but you can see my back test from the 6th of December all the way back like 10 weeks or something like that. I don't know how far I went, but you can see how everything fared. So, on this one, I remember I didn't finish out the week, so I need to update this. Maybe I'll highlight this in yellow because I know it's not done yet. I need to update those numbers, but this one's correct. So from the trades from the last week of November going into December, these would have been the trades you would have taken right here. These are your top 6. The way the strategy works is you come in here on Sunday or Saturday or Friday afternoon, you get this new data, you find out what your top 6 trades are, okay? You go through this analysis, and everybody should be able to do it the same. It's not subjective, because once your data's in, you're just taking the top 6. You're picking the 2 most long or the 3 most short, or the 3 most long and the 3 most short. The reason why I'm doing the 3 most shorted and only 2 on the long side is because there's not a lot of long side to pick from. We have a lot of shorts to pick from, but so that's why I'm doing that. If it were to flip someday and we had more options on the long side and fewer on the short, then I would probably have 3 green opportunities and 2 red opportunities instead. And that's what would give me my 6 trades. Okay. So basically the strategy works like this. You just take a basket of trades on Sunday, or Monday, doesn't matter, just start of the week. You could even take them on Friday. Well, this report's released after the market closes, so you couldn't technically take them on Friday, although you could do your analysis on Friday. That's the only thing you could do. Okay, so we'll just say Monday morning, you hop in here and you take all 6 trades. You figure out how big of a lot size you want to take. I would recommend a fixed lot size across all 6 of them. And then what most people have been doing is they just take the average daily range, like the biggest average daily range of the week. So the way you find that is you just go to like Maytaf, and then you find the currency pair you're trading. We'll say it's the pound. Yeah, we'll say pound CAD. And then you just you find there's a couple ways you can do this. I wouldn't recommend, here you go. It looks like Thursday is the biggest day of the week. So that's your stop. So that's just a general stop loss. Okay. And it's a consistent way to do it because there's an actual methodology behind it. It's just saying, hey, I'm going to give this market the biggest average daily range of the week as my stop loss. If the market doesn't go in my favor, a full average daily range, like if it goes against me, a full average daily range, I don't want to be in the trade. I'd rather stop out. So naturally, you're having a 175 pip stop loss on the pound CAD because that's the daily range. And then your target on that's 2 or 3 times that. And honestly, I don't even use a target with the strategy. That's how you just have a stop loss, no target, because it's a time take profit. So here's how this works. So you go in, you put in a stop loss, and you take the trade on Monday and on Sunday, or whichever. You put it in with the stop loss, take the biggest average daily range of the week, which in this case it's 175 pips, and then no take profit. You forget about it and you come back a week later and find out how much money you made or lost, because there's some weeks where you lose, right? So in fact, you can see my results with this because I've back tested this. Like during this week, you can see the trades that made money. This one lost 69 pips, made 14 here. This trade was number 3 and it made 208 pips. This trade lost 10, made 41. This trade, number 6th in line, made 226 pips for a total after losses of 410 pips. The week before that was a gangbuster week. You can see the week of Tuesday, November 22nd, 107 pips on the pound franc. That's from holding from Friday, or that's holding from Monday to Friday, or Sunday to Friday. 107 pips. This one made 63, 95, made 40. And then this one was huge. Look at this. I don't know what it is. Sometimes the number 1 trade does fine, but sometimes it's like the 5th or 6th best or 4th best makes the most money. I don't know why. That's why I like to take a basket, because you don't know which one's going to be the best. Some of them just are amazing. So this one made 366 pips, and that's from holding from Monday all the way to Friday. No take profit. It's a time target. So whatever you get by Friday, you close out and you take that, and that's your money, right? So anyway, that's it in a nutshell. So you can go back and see all the results of this. There are some weeks that are pretty terrible. Obviously this week, every single trade made money, made 961 total pips for the whole week. I mean, you could make some serious dough with 961 pips across 6 trades. I mean, imagine if each trade's a standard contract. Yeah, that's almost $10,000 of profit. But there are some weeks where you don't make that, like this, you make 410 pips. There have been some weeks where I've lost, nearly 1,000 pips, and it's because some weeks it just kind of resets and everything just kind of loses for some reason. So anyway, that's why I would recommend just having a stop loss. Obviously, of course, have a stop loss. Like, anybody who tells you not to have a stop loss, you should not listen to, right? You have to have one. You got to treat this like a business, because you might actually get away by not having a stop loss for a while. You might actually be able to get away with it. But in the long term, if you want to do this long term, you have to have one. Okay. So, but that's what's cool about this, is there's no target. It's a time target. You just close everything out and reset the following weekend. And then you go from there, which is pretty cool. But that's it in a nutshell. You're just checking out, you're just doing your analysis, finding out what your top 6 are. I'm actually curious. I didn't trade this week, but I am curious to see how some of these have done. Like, I mean, it's week's not over yet either, right? But I'm curious to see how some of these have fared this week. Maybe just stay from the start of the week. Where's the start of this week? Say January 1st, we'll say, or 2nd. This one's been just all over the place, right? Started here-ish, was up, then was down, came up, down, up, and is right here. You'd be down just a little bit right now if you were in the pound CAD. Part of that's because everything's just so choppy right now. No one knows where to send the market. There's not enough news. We're like, okay, new year, new everything, but no news events. So all these banks are like, okay, so where are we going? Are we going to buy? Are we going to sell? I guess we'll just go both ways right now, because no one really knows. But yeah, I was just curious. Let's see some of these others. Like, how about like 6th place, the Euro Yen long? I don't even know. Let's see how that's done. And again, there's still another 2.5 days to go this week. Yeah, started here, started bad, came down 250 pips, and now it's up to here. You'd probably be a little positive or break even on that one. See where it ends up. It is interesting to me, though, that it did come down, but the banks bought it back up and then sent it higher. I think that's an important thing to note. Let's look at one more, maybe actually don't know where the euro dollar's been at. I don't trade the euro dollar that much. I used to all the time. Yeah, this one pulled down and then has come up since, but you'd probably still be down on that one. But again, week's not over, so we'll see how that one plays out. And that's also why I like to take a basket of trades, is because when you have that basket, some might lose, some might win. I think overall they're pretty correlated trades, though. So in general, what you'll find with the COT report is, on the weeks you win, usually everything wins. Usually the whole basket wins, or most of the basket. And the opposite's true. If you're going to lose, usually the whole basket loses, or most of it. So that is something to also remember when you're managing your risk, is asking yourself, okay, if every single one of these 6 trades hit their stop losses, where would I be? Would I be okay or not? And if not, then you need to reevaluate and say, okay, I need to lower my lot size to make sure that I'm going to be okay with this. The cool thing is, if the trade just takes off in your favor big time, it's nice to not have a target. It's just a time target. So at the end of the week, you have that permission to close your winners. It's also kind of nice to have something, just a side note. If you're the kind of person that struggles to hold on to a winner, it's kind of nice to take out the, most people when they take profit, and I do this with the banker's close, I base it off of supply and demand, which often can be kind of subjective. And this takes that away a little bit, because when you have a time target, anybody knows what time it is. And if I tell you at this specific time, close the trade, end of day Friday, within 2 to 3 hours of the market closing, go ahead and take your profits. That's an easy rule to remember. And that's an easy rule to follow, I think, because it's so cut and dry. This is what it is. You do this and this, right? And I literally have a client who took this trade strategy to heart and got funded with the COT report. So yeah, you can absolutely create an income. Anybody, I feel like everybody should be doing this, right? Like, even if you can't trade the banker's close, which I hope all of you can at least try to get to, because it is such a great trade setup. But even if you can't, I have all sorts of stuff that can help you get funded, whether you can be there or not. And that's why I'm hoping you guys will take advantage of that, because I've got all sorts of things that can help you get there. And this is one of them. And it's a great opportunity to do it. But that's it in a nutshell. And I don't have it written down. I need to write down the rules, but it's pretty much just go through the COT report analysis, find your top 6 on Sunday or Monday, go to Maytap, find out what the biggest average daily range is, make that your stop loss at the beginning of the week so that you can sleep comfortably, knowing that you have a stop loss in there. No target. Let the trade sit all week. Some may close at stop losses during some weeks, and others, all of them will stick around. And if they all make it, then most likely you made money. And then on Friday, before the market closes, close everything out, flatten your position before the weekend, enjoy the profits that you made on the trades that won, if not all of them, and then reset on Sunday or Monday. And that's it. It's really that simple. So anyway, and I've got my back testing results here, so you can kind of go through here and see if it makes sense for you. Yeah, here's a week where I made 1,000 pips. It was on the week of November 8th. Every single trade made money that week. 114 pips, 204 pips, 148, 250, 126. I mean, that's kind of cool. You look at your trades down below and you're like, dang, I'm up 1,031 pips. But yeah, and most weeks it makes money, but there's going to be some where you don't, and some where everything, there are some weeks where everything loses. I just got to make sure that you guys are on the same page with that too. Anyway, guys, love the COT report. One quick thing on it though, try not to use this as a direction for your scalping every single day, because there are plenty of times when the pound CAD, even though the signal's long, is going to go down instead. Okay. This is an overall direction. You're looking for swing to overnight trades in these directions. If you have that context, you'll be fine. Okay. All right, guys. Well, I appreciate your attendance. Thank you for coming. If I don't have any questions, we'll go ahead and wrap up. I'm looking forward to seeing tons of success with the COT report this year and hearing more great stories with how you incorporate it into your trading and how many of you can get funded this year. I hope many of you do. Even, doesn't matter what strategy. I just want to help you get funded, find success in your funding, no matter what strategy you're using, right? So, and I hope this COT report helps many of you. So thanks for coming, guys, and we'll catch you in the next webinar.